regardless of Republican or Democrat, we do see that likelihood of discussing about tariff on China or tariff on other country will happen, especially if, let's say, Donald Trump, he may prioritize America first, so he may also tariff, for example, the airlines like Taiwan or even Japan. Good afternoon, everyone. It's end of the month again, and welcome to our monthly market updates for Busy People series, where we'll get you up to date with the global stock market while you are having your lunch. I'm Chye, a financial market analyst and coach at Beyond Insights, and this is your express session to get up to date with the stock market. We'll cover the market highlights, major stock market indices performance, and the upcoming opportunities and also risks out there. So are you guys ready? You may type me in the chat if you are ready for this market update. All right, let's go. Just an important note before we proceed, whatever we share here today is based on the latest data and also facts. If there is further development, things may change. And we want to make sure that you know we are not a licensed investment advisor and we do not manage customers' funds. We are an educational institution, so our purpose here is to educate people so that you can make your own decisions and be your own investment manager. That way, you have a better control over your results. If you're looking for stock tips, this is not the place for it. All information we share here are meant for educational purposes only and must not be taken as a buy or sell recommendation. All right, so let me start the timer. Okay, as usual, let's start with the market highlights. So first of all, we have cooling inflation. So how many of you are active in the stock market over the past few weeks? How was the market looks like? You may type in the chat, how was the market looks like? Bullish, bearish, or up or down, or maybe sideways? Yes, some of you mentioned sideways. All right, so inflation has been coming down recently. Over the past 4 months, it has been coming down gradually. However, during the last announcement, we do see that there are some profit takings among the tech stocks, among the big tech stocks, for example, those big cap like those Magnificent Seven. And we do see that funds are rotating into small caps, for example, like all these Russell Index related stocks or any other sectors that has been benefit due to potential rate cut. And we do see this trend started the sell-off in the QQQ, which is the Nasdaq 100. And the S&P 500 and the Nasdaq 100 further sell off after the following events. So first of all is the Trump shooting. So how many of you heard of the Trump shooting incident? You may type me in the chat if you heard of it. All right, so we do have this incident, Trump shooting during one of his campaign. And after that shooting, the odds for the presidential election shifted in favor of Trump. And a lot of funds actually switched to those stocks that are benefits or stocks or sector that benefits from Trump win or potential Trump win. Hence, you can see that there are rotation in the market. After the shooting incident, a lot of funds shifted their position into sectors that are benefits if, let's say, Trump managed to win the election. And second events that followed right after will be the Trump's comment on TikTok. So how many of you aware of what's Trump's comment on TikTok? You may type in the chat if you heard of any. All right, so in one of his interviews, Trump actually mentioned that he opened for TikTok to come into the US because he said he's open for competition because if let's say we never let TikTok come into US, Meta we only have the Instagram and also Facebook in the US. So he do open for TikTok to come into US. Hence, what happened to the stock price of Meta? Meta actually came down before even the market coming down correct further. Meta already came down on that day. And other than that, Trump's also comment about Taiwan. So how many of you aware of what Trump's comment on Taiwan about? You may type in the chat as well if you're aware of it. So in one of the interview as well, Trump also mentioned about if let's say for US to defend Taiwan, Taiwan may need to pay the US. And he also mentioned about semiconductor manufacturing. Taiwan is taking a lot of semiconductor manufacturing out of US. So with these comments, we do notice that the semiconductor industry are coming down as well. So partly we suspect that maybe Trump's comment is to have Taiwan to buy more weapons from the US, or he want more semiconductor manufacturing to move back to the US. And this will affect those semiconductor stocks, and also it may affect all these semiconductor companies' profit margin as well, because higher cost if you manufacture them in the US. And other than that, we can see there is more and more events over the past few weeks. So one of it will be also the big cap earnings miss. So big cap, like for example, Visa, the earnings result not as good and the stock has been gapped down. And also at the same time, we see Google, despite reporting earnings that beat their expectation, but due to certain forecasts, the stock gapped down as well. And if those big cap gapping down, what will likely happen to the index? You may type in the chat as well. If let's say big cap gapping down, what will happen to the index? Yes, it will come down as well. And other than that, how many of you aware of the global tech outage? The global tech outage, the blue screen everywhere. Yes, airport, we have blue screen in airport, blue screen in factory offices, and so on. So this is happened to one of the field patch, one of the update patch issue with CrowdStrike. So this will be a company specific issue, but it do affect other software company as well. For example, Microsoft. So this also cause some volatility in the stock market as well. And this CrowdStrike issue may potentially become a company specific issues because this may harm their reputation as a cyber security companies as well. So we can see that over this series of events, the market has been pulled back a lot over the past few weeks, from all-time high all the way to, I think, a certain percentage of a correction, and now it's resting somewhere and near finding a support, but it haven't firmly rebound off the support yet. So what traders and investors can do then? So we do expect more volatility ahead. We do see that there will be more uncertainty ahead as we are getting closer to the presidential debates. Then we have the FOMC, upcoming FOMC, plus the upcoming inflation data as well. And also next few days, we have a few big tech announcing their earnings as well. So we do see that more volatility and uncertainty ahead. So traders can focus on stronger sectors. For example, certain sectors that in favor of the Trump win has been rallying over the past few weeks, and also at the same time, sectors that in favor, if let's say there is a rate cut in September, also rallied as well. But we do see that because of the uncertainty in terms of the presidential candidates, and also we have upcoming presidential debates ahead, so the odds of who in favor to win the presidential election are quite tight now, quite even now, despite Trump still being the favored one. But because of Biden stepping down and also at the same time Kamala Harris is a potential new candidate, the odds are changing. Hence, there will be more uncertainty. And when there are more uncertainty, we expect there will be more volatility because market don't like uncertainties. All right, so as a traders, either you choose to stay up or trade intraday, or you can trade the stronger sectors. And for investor, you can take this opportunity actually to identify strong fundamental stocks, work out the valuation, and also wait at the strong support level. And having said that, usually in the most uncertainty situation, the best deal will be found. So investors do look out for good deals. And in order to look out for all these good deals, you need to prepare yourself ahead. You need to know what's coming and what are the potential stocks out there for you to find the best deal. And as usual, after we go through the high levels of what happened around the market, let's take a look on what happened to the stock market performance as well. So usually we can compare a few stock market indices together. And these are the 10-year performance. So let's go through the list first. So we have Nasdaq 100, which represent the top 100 tech stocks in the US. It has been in a bullish trend throughout the year. And after the Fed start to pause their rate hike. So if let's say you are the longer term perspective investors, or you want to go to see which market provide you the best return or most consistent return, you can see that Nasdaq 100 over the 10 years provide average per year return of 43.75%. And despite the recent pullback, I would say this is a temporary issue. It may be because of the uncertainty due to the presidential election candidate plus the FOMC ahead as well. So investor and trader can wait for the indices or the stock market to go down to a more better valuation level and find a good strong support level first, and identify those companies that are able to provide you consistent return, or those fundamentally strong companies that are able to grow double-digit % over years and so on. So I would say Nasdaq 100 is still currently in a correction or a pullback. So investors or traders may need to monitor which level the index finds support as well. And number 2 will be the S&P 500, represent the 500 biggest stocks in the US. which represent the overall stock market in the US, and you can see that in the long term also it has been going up. And recently, despite some pullback, we do notice that S&P 500 are holding holding better compared to Nasdaq 100. This is because there are some rotation out of the tech stocks, but there has been some participation or some buying in the other sector, for example, finance sector or small cap sector as well. So do monitor if let's say the rotation still going on, and because of the odd has been changed for presidential election, Kamala Harris coming in. Hence, we do see that there will be more uncertainty, and there might be potential pullback for S&P 500 as well. So do monitor further as well, because based on yesterday's close or last night price action also, the correction, I would say the pullback not yet find a stable support yet. And number three, we have China market. So you can see that over the 10 years, if you invested in the China market, the return are lower. And also same for Hang Seng market, minus 2.55%. And if let's say Donald Trump in favor, for this election, and in case Donald Trump really win the election during the year-end presidential election, what will likely happen to the China indices and Hang Seng index? Whether they will be benefit because of Trump win, or they will be even potentially a further correction. I would say, if let's say Trump win, we may see more and more tariff. We may see he implement more and more tariff on China or China region or even Taiwan region, because he want to pressure or the manufacturing come back to America. So we can see that if let's say Trump win the year-end election, there will be more headwinds for the China market, and it may cause more volatility in the China market as well. Despite currently China market already showing some great valuation, but because of all these macro factors or these geopolitical events, they may suffer a lot of headwinds from it. Hence, we do see that it could be the bottom for China market, but whether it can continue with a bull market, we subject to further monitoring. And at the same time also, China having some economy crisis. So how many of you aware of what is the economy situation in China? You may type in the chat whether their property are doing well or whether they have having a very strong economy now. I would say in China, currently they have some property crisis, which you can read among the headline. And also at the same time, their inflation has been slowing down, which means people are not spending the money. And at the same time also, their unemployment is high. The unemployment for the youth are very high. So we may see that the spending or consumer spending over in China is slowing down as well. And with all these factors, it's not easy for them to resolve in a short term. Hence, in longer term, we will see that there will be a smaller move in China market unless they manage to resolve the economy situation and also the geopolitical tension slow down. But we don't see that factors will happen in near term. Hence, China or Hang Seng market, I would say, is not so favorable. And why I said Hang Seng market also not favorable, because Hang Seng usually suffer double whammy when the global stock market are having some correction. They are also affected by the US market, but at the same time, they also affect by the China market as well. So Hang Seng may not as favorable as well. And lastly will be the Bursa KLCI. So for our local market, how many of you are invested or monitoring the local stock market? You may type in the chat as well. Yes, Bursa is good recently. We can see that foreign funds are coming in back to Bursa market, and we do see that indirectly. So we can see that there are geopolitical tension between the US and China, and a lot of manufacturing or manufacturer actually move their factory out from China. And the next destination they move usually will be Southeast Asia. If let's say you take a look on the recent companies that invested in Malaysia, those companies that are moving out from China are coming down to Southeast Asia, especially semiconductor related. So we do see that Malaysia benefited from this geopolitical tension as well. And at the same time, what is the recent trend for the computing market? Anyone of you heard of AI or data center, all these technical terms like artificial intelligence, data center? You may type me in the chat. So other than all these semiconductor companies coming in to Southeast Asia, for example, like Malaysia, data center, because of AI, data center also coming into Southeast Asia as well. And Malaysia actually benefited from it. We have, like for example, someone mentioned in the chat, Johor win quite a lot of contract about data center. And this also benefited Malaysia's economy as well. And we can see that happens in stock market too. And Penang will be more benefit from all these semiconductor companies. And we do see that all these AI data center coming in, and Malaysia have sufficient land and also utilities. And at the same time, also we see that Singapore, according to their AI strategy plan, they want to become one of the world leaders in AI. And that benefited Malaysia as well because we are the neighboring country and we can provide them the utilities and space for all these data center as well. So I would say for Malaysia, we do have some fundamental strong stock as well. But based on the data here, based on the chart here, which market will provide you the most consistent return or most predictable return over the long term? You may type in the chat as well. Based on the few chart I shared here, in the longer term, which country will provide you the most consistent return? Yes, the US market. Because for investors or traders who are looking for high growth, the US market still have the high growth companies and they have strong drivers. For example, they are the leaders in AI. And with these AI trends, we can see that companies like Nvidia, like Microsoft, actually, even though they are already mega cap companies, they also manage to churn out double-digit growth or more because of all these new trends. And in the US market, also, we have the most global brands as well. So how many of you heard of all these global brands from the US? You may type in the chat what companies or what global brands you heard from the US. You may type a few examples in the chat as well. All right, so for example, Amazon, Microsoft, Google, I think most of you know them, and also Apple as well. So we can see that in the long run, the US market still provide the most consistent return and also the highest earning growth and the most predictable return as well, as long as you pick the right company. So I see some question in the chat. How about Nikkei Japan Index? All right, so Japan, yeah, despite early of this year, we can we can see they are having some investment. The market has been bullish for Japan over the past years because of the semiconductor shift as well. Things are shifting out from China, and other than China, a lot of companies also want to de-risk from Taiwan. So for example, let's say you are a semiconductor manufacturer. Like for example, TSMC is one of the famous semiconductor manufacturer in Taiwan. And the world do see that there will be issue in terms of supply chain issue, in terms of supply shortage, if let's say anything happened to Taiwan. So Japan also, like Southeast Asia, benefited from this semiconductor shift. High-end semiconductor, like those more complicated process, move to Japan, and those back-end lower tier one come to Malaysia. But because of Donald Trump's comment, he want to tariff Taiwan. He want Taiwan to pay more. So the allies country also will likely get hit as well. So Japan also have the same issue. If let's say they got tariff, the US pressure them to move the manufacturing back to US, they will suffer in terms of cost as well, and they may be facing those manufacturers pull out from Japan as well to go to US. So this also cause volatility in the Nikkei index as well. So you may need to monitor further what happened to Nikkei index coming on. I would say it also pulled back together with the Nasdaq 100 because of that few Trump's comment and also that few events that happened in the stock market recently. All right, so having go through all the indices, so let's go to the another factor, which is money on the sidelines. So for those of you that attended my market update over the past month, so there are still a record of 6.4 trillion in cash on the sidelines. So we can see that there are still plenty of cash on the sideline in the money market. So what is a money market? So a money market works like our FD. So when funds sell their position, they have cash with them. So all this cash, usually they will park into the money market to get interest rate. So to collect the interest rate, temporarily park the money there to earn interest rate. It works just like our FD. All right. So one of the reasons why investors are stocking up all this cash is one of them is because of the high risk-free rate. So in the US, what are the interest rate now? In the US for their interest rate is very high. It's around 5.5%. So 5.5%, you park the cash there, you get 5.5%. So it's a very good risk-free rate for those funds, especially those more stable fund or those retirement fund. It will be a good deal. However, now we are nearing the end of the, I would say, we are nearing the end of the rate pause cycle as well. Rate hike already finished. There has been a pause for a while already. It's just a matter of time when Fed decide to cut. But it all subject to all these inflation figures or inflation trend. So if let's say when there's an end of this rate hike cycle and coming towards the rate cut cycle, this massive 6.4 trillion pile of cash could potentially act as a fuel to drive the next bull market, or they may go to the bond market. So depends on how they diversify the funds. So likely it will act as a driver as well when all these funds start to move or rotate out from the cash market and move to risk asset or bond asset. So we may need to monitor that movement. So for now, I think due to some uncertainties, we haven't seen a significant move on all these money market to stock market yet, or either bond market yet. So there are some movement, but not much yet. So when we are on a rate cut cycle, we do foresee that the movement will be much more movement. All right, so there will be much more movement when the rotation starts. So we may need to monitor this as well. And next will be what to focus ahead. What are the risks and also opportunities out there? So first of all, as an investor, usually we take care of our risk first, because we want to manage our risk first before we go for the opportunities. So first of all, will be the inflation trend. A key things to monitor will be inflation trend. So a delayed rate hike, sorry, not rate hike. So a delayed rate cut may cause more delay in corporate and consumer spending. So the coming inflation trend is crucial. We want to see it continue to coming down. And also at the same time, if let's say inflation still remains stubborn, for example, let's say inflation trend still remains sideways, then a higher US dollar may impact the global sales and also China stock listed in the US as well. But for now, inflation trend is already coming down over the past 4 months. So let's continue to monitor the subsequent trend, whether they are continuously to come down. Then chances of a rate cut, it will be increase higher if let's say the trend is continue to coming down. And next one will be slower global growth. So as we know, China still in a crisis mode, especially their property. And despite they are churning out the GDP around 4-point-something%, I would say for China in the past at average at 6%, is a slowdown already. Now they are at a slower GDP growth now. So we do see that with the situation in China that not easily can be resolved. So China will continue to slow down. And at the same time, Europe and also UK, we also see a lower GDP growth as compared to US as well. So currently the whole world, only US market are the one that are having a better economic growth. So we may need to continue monitor this situation as well. And next one will be geopolitical tension. So if let's say we are approaching a presidential election debate, we do foresee that more and more discussion will ongoing, especially during the presidential candidate debate. There will be more and more tariff talk about how they will be tougher on China, and also potential supply disruption as well. For example, if let's say the pressure, because of all this geopolitical tension, the pressure on manufacturing movement, for example, move to Southeast Asia, move back to US, or move to even Mexico. So all this may cause potential supply disruption, or all these sanction and ban may also cause potential supply disruption as well. And also at the same time, we do see that oil price also fluctuate recently due to some geopolitical tension in the Middle East. But this one, I would say less influence to the stock market, because of, I think stock market already factor in all this war early on. For example, the Ukraine-Russia war and the Gaza war still ongoing, but market looks like already factor in all those. But now the focus are more on all these presidential election and the potential candidates that going to win the election. And lastly, yes, like I mentioned, US election. So these are one of the key things now. So there are more and more tariff talk among the presidential candidate debate. If let's say, regardless of Republican or Democrat, we do see that likelihood of discussing about tariff on China or tariff on other country will happen, especially if let's say Donald Trump, he may prioritize America first, so he may also tariff, for example, the airlines like Taiwan or even Japan. So we may need to continue monitor this one. And the tougher on China will be one of the keyword they may use. For example, before we have this presidential election, Biden also mentioned about some tariff on China as well, before he decide to step down as a presidential election candidate and give it name Kamala Harris as a potential new candidate. But however, the candidate haven't confirmed as well. From Democrat, we need to wait for their convention first. So this one subject to more volatility due to the uncertainty on this factor. And after we go through all the risks, let's go through the potential opportunities we have. So we still see that those industries that align with mega trends, for example, AI, cloud computing, still favorable, but it will face a short-term headwinds. It could be maybe this quarter or until after the election, because we do see a significant pullback on all these stocks due to Trump's comment. For example, those AI-related like semiconductor. They has been rallying all this while, but due to the comment about Taiwan and also the valuation already at the high side, so funds are taking profit from it, and we do see that it can pull back furthermore. So despite it's still a favorable opportunities, I would say the sell-off may continue until it find a new support or until we have a good valuation for all these stocks. And the next one will be the upgrade cycle, which is AI-driven upgrade for consumer electronics, smartphones, laptop, tablets, and wearables. So in the last year, we see that business expansion on data center about AI, business side. So consumer side, we do see there could be a cycle for consumer upgrade as well, because we do see more and more AI products for laptops, for smartphones, for tablets, and also for wearables. But this likely will come in next year due to the uncertainty we have now. And for those that who are our students here, this weekend or this Saturday, we have a 3 hours quarterly market update for you. And since this is just a 30 minutes update, I cannot cover that much information. So do join us as this Saturday's quarterly market update, where we have 3 hours of session for you to update you about FOMC and also more detailed update about all these events and how you can, we do have case study for you as well on how you can react to it next time and so on. So for those who are our students, do come and join us, because you can learn a lot of valuable lessons out of this 3 hour session. And for those who are our students as well, who have attended Industry Insight and Macro Insight, also will be able to react to this event as well and capitalize on this event. All right, so this is just a 30 minutes upgrade, so I'll move on to the next point. So the next point will be sectors that benefited from favored presidential candidates. For example, after the shooting, we can see that Trump favored stocks actually rallied. So we do see similar situation. If let's say one day after certain presidential debate, depend on who have suddenly increased their odds. Maybe for the next debate, maybe Kamala Harris doing well. Then we can see that things can shift again. So you may need to start to prepare yourself ahead. Which sector or which stock potentially in favor if let's say a Trump win, or which sector or which industry are in favor if let's say a Democrat win. So if you prepare ahead, then you can take opportunity of this rotation. Once you see the news, you can straight away rotate to the relevant sector. And for example, Trump favorite sectors, one of it, like someone mentioned in the chat, finance sector. But the why behind is a long topic, so we'll keep it simple. You can do your own research. If let's say you are very passionate about stock market, you can start to research and prepare yourself ahead. If let's say a Trump win, what is the favorite stocks? Let's say it's a Democrat win, what is the favorite stocks as well? So you can prepare that ahead of time, so you can react better on it. And also at the same time, we have opportunities, companies that has demonstrated resilience to slower consumer spending also will be in favor. For example, those resilience company that have less exposure to China, and also having low debt and strong cash flow. So in simple term means fundamentally strong companies with strong cash flow and also lesser exposure to China. Those companies will likely in favor. And lastly will be like the same point I mentioned in the last slide, money on the sidelines. So this is more related to a rate cut kind of themes. So other than the presidential election, rate cut themes also will be a major themes for the coming quarter. So if let's say the rate cut started, or the rate cut news from the Fed committee, the Fed itself, if let's say they are more dovish, then we can see that the rotation likely will happen as well. So these are a few opportunities for you out there. And in order to capitalize on all these opportunities, it's best for you to prepare ahead, get yourself ready. All right. So we are running, okay, so the timer is going to 0. And since this is just a 30-minute update for you, we would like to invite you to a free 3-hour webinar that covers a framework on how to approach the stock market in a systematic, versatile, and safe way. Just like I mentioned earlier, we have a lot of opportunities out there, but at the same time, they will also come with risk as well. So in order to invest in the stock market safely, or invest in the stock market safely with your hard-earned capital, it's better for you to prepare yourself and have a systematic way, a versatile way to handle different kind of market condition, and also a safe way, a risk management. We have the most systematic course in the market. So every trading style we covered will have a process map for you. And process map means a process step, a one-pager process step for you to follow on the process. And we also have the versatile strategies to handle all the market conditions. If market go down, you have the trade down method. If let's say market goes sideways, you can trade sideways, and if market going up, you can trade up as well. And we also have a safe approach with proper risk management as well. So in order to take opportunities of this pullback, because now market are pulling back and there are still room for the pullback, and you can take this opportunity to plan and practice. You also take opportunity to plan and also practice at the same time. And when the opportunity come, you already have the skill set and you will be ready to catch the opportunities and get yourself ready. Or I would say catch the opportunities and get yourself capitalized on this recovery. And also we have a hybrid class for you as well. The coming intake, we have face-to-face, we have online as well. So do join the 3-hour webinar to find out more. And the next available webinar will be on 3rd August, which is this Saturday, 9:30 a.m. You may scan the QR code in this slide to register. And if you find this market update is beneficial to you, do recommend it to your friends as well. And now I will open the floor for Q&A. So any questions you have for this market update, you may type in the chat. Any question you have. Okay, so some of you mentioned many legendary investors are cashing out. Are they knowing an impending stock market crash in the US? All right, so typically you may read around the headlines, who are selling, then some may predict there will be a crash or so on. It's quite common you come across these news. So as an investor, yeah, I don't have a crystal ball, I don't know the future. But what I see from the market, some of the investors, especially big funds, are taking profit or cashing out. It's likely because of the valuation already very high. All right, and usually they have limited capital as well. They have the limited funds, they are cash position. So they cannot invest all their position into these big tech companies like Magnificent Seven, because when the valuation is very high, when they see opportunities in other sectors, when they want to move to other sectors, they may need to sell some of the position in those already high valuation and move them to a lower valuation sector or sector that are in favor. So I would say, yes, time to time they may sell when the market are very expensive or when the valuation is very high. So as a traders, when we approach the market, make sure we have a proper risk management. We know when to get in and we also know when to get out. If something wrong, we know where to get out. And when we get out, it doesn't harm our capital much. So we can re-enter the next time or we can come back again the next time. So I would say, I don't know the futures, whether there will be a market crash. I would say now is the pullback, a correction or a pullback of a stock market due to uncertainties ahead. And when the valuation get better, funds may come in back as well. And funds may also rotate to those sectors that are in favor of the next president, because if let's say a change of president means a change of policy. So we may need to monitor that. So the best for now will be watch out first and get yourself ready, identify the good sectors and good stocks. Then as the opportunity arises, it's time for you to re-enter and make sure you have a proper risk management. And you need to know when you need to get in and when you need to get out or stay out. All right, so one of the question, how about, okay, do you see the tech and AI megatrend to continue to next year? Well, I would say the tech megatrend likely to continue. AI inevitable, things are shifting, technology world are shifting. We are talking about AI, autonomous driving, and all this. Just a start. It's just I would say last few years was on the corporate side, consumer side. We don't see much activity yet, and I likely to see this trend. Likely we see this trend may continue, but now all these sectors or industry, the stocks in all these AI related sector or industry are already at the high side. So there will be some profit taking. So there might be some pullback ongoing or some profit taking ongoing on all these sectors. So as the indices or sector correct or the industry correct to a fair value level or a better valuation level, likely the funds may come back in as well. Or as more certainty in the market, as we see more which candidate likely to win the election, then certain sector may be stabilized and funds may come in back. And how about Buffett fund? Reserve a lot of cash for market crash and get in. All right, so Warren Buffett has been in cash position. If let's say I am not remember wrongly, he has been in a quite high cash ratio over the past years, quite a lot of years. So his style is different. Warren Buffett is a value investor, so he may reserve his cash when the valuation really great. Really a market crash, only he will deploy his cash. So he also still stay invested in certain stocks. And if you are the Warren Buffett, big fans of Warren Buffett, you may see which stock actually is holding, his ratio of holding is very high. I think one stock, if let's say some of you follow Warren Buffett one, his fund holding quite heavy on one tech stocks as well. So he's not totally, I think he's just reserved a lot of cash, so in case any opportunity, he can still seize on it. And he do see that the market is expensive now if let's say he's holding a lot of cash. All right, so this is in terms of valuation perspective for value investor. But for growth investor or traders, there will be different perspective. All right, so this is what I can cover. And I see another question. Besides small cap, with Magnificent 7 also benefited when interest rate is cut is near. Okay, so this is a tough question, a very good question as well. So Mag 7 versus small cap. So like I mentioned earlier, some of the funds might have high exposure on Mag 7 and they cannot rotate to the small cap without taking profit on the Mag 7 because they want to balance their portfolio. So I would say Mag 7 benefited as well in long run, but when this news come out, there could be potential sell on good news on Mag 7 and move to small cap. But this is just my assumption. All right, so we cannot 100% sure the future because I don't have a crystal ball. I cannot predict the future. But likely the same trend will happen over the last CPI, the last inflation announcement. When we have a lower inflation, big funds are taking profit off the Mag 7 to buy into the small cap. So if let's say coming months, if you see similar pattern, yeah, that could be happen as well. So you may not want to expose too much on Mag 7 for now. And yes, Warren Buffett biggest holding Coca-Cola and Apple, and especially Apple, the biggest holding. All right, so he's also holding tech stock, but at the same time, I think because of the market on the high side, he also spare a lot of cash. And yeah, so whether a market crash happened or not, we may not know until the market really crashed. All right, so the best will be prepare yourself, have a proper risk management, and know when to get in, when to get out. All right, so last question I'll take: will market more volatile if Democrat nominate Grimson or Michelle Obama instead of Kamala? All right. So very good questions. You are really following the presidential election. Yeah, for now, Kamala still in favor, but we don't know yet until the convention. And yes, if let's say someone come in with even higher odds, let's say previously we have Biden and Trump. Then Trump, because of the shooting, more in favor, very hot favor. Then Biden, because of his age or condition, then it will become very low odds for him. That's why that time Trump is very hot, and you can see all the sector that favor Trump's rally. But when Kamala comes in, now the odds change. Now it's getting closer to Trump. Hence, we can see that uncertainty happens and market become volatile. And yes, you are right. So it could become more volatile if someone with better odds came in. But for now, we don't see the other two names yet in the hot favor as compared to Kamala. So we may need to wait until the next Democrat convention and when they finalize the candidate, then how will the market react? And also subject to the coming presidential debate as well. If let's say the candidate from Democrat did really well, then it may still cause volatility as well. Or if let's say Donald Trump did even really well or something happened, then we may see some volatility ongoing as well. Because it's quite normal market react to uncertainty in a more volatile manner because market don't like uncertainty ahead. All right, so with that, I hope I answered your questions and we are running out of time. So again, if you find this market update is beneficial to you, do recommend it to your friends. And if let's say you're interested in our 3-hour webinar, do scan the QR code and join us in the 3-hour webinar as well. And for those who are our students, see you in this weekend as well for the quarter market update. All right, so that's all for today's market update. See you again and hope you all trade well and prosper in the market. All right, with that, goodbye.